Good morning, and thank you for joining APF Holdings Investor Webinar. Our topic for today is the ongoing IPO and its latest changes, the offer period extension and share price reduction. Let me introduce you with the hosts. Jurijs Adamovic is the group founder and chairman of the management board. He is accompanied by Māris Vainovskis, a senior partner at Evershed Sutherland Bittāns, the legal consultant of APF Holdings IPO process. We will start with the presentation and continue with a live Q&A session. Please join the discussion by adding your questions in the Q&A section underneath the presentation. The recording of the webinar will be available shortly after the call. I am now handing over to the presenters.
Good morning, dear investors, dear participants of our webinar. The subject of today's presentation is to inform you about the amendments in our offer. Those investors who joined our webinar for the first time and are interested to learn more about APF Holdings at the issuer, I kindly ask to refer to the recording of our previous webinar of October the 17th, where we have presented the IPO narrative, our business model, and forecast. So today we'll focus only on the amendments in the prospectus, which were yesterday endorsed and officially approved by the regulator, which in our case is the Bank of Latvia. There are two major changes in the prospectus. The first and foremost is the extension of the subscription period. Now, any investor willing to buy our shares or subscribe to the IPO is able to do so until the Friday, 3rd of November, 3:30 p.m. But we kindly encourage our investors, retail investors in particular, to submit their orders before noon, because as we know, all banks operate different internal procedures, and some of them are closing acceptance of incoming orders around noon, some do so around 1 p.m. So once again, we do encourage to submit your orders, if possible, before noon on Friday. The second major change is a new price. Starting today, all investors can purchase the share at the price of €5.11 per share. So the new price, improved price, which is available for investors starting today. Now, why these changes happened? There are two major considerations that have led us to this change. One of them is the revised capital requirement for APF Holdings to conduct and implement the investment program, which we announced. On the 19th of October, we have received an official decision by the Ministry of Agriculture, the Rural Support Service to be more specific, which is granting us €2 million of additional capex subsidies. Now, on the good side of things, we were not expecting this decision to materialize this year. We were expecting to have it, but at a later stage. So this comes as a positive piece of news for us. And at the APF Holdings Management Board, we took a decision that it would be only prudent on our part, since we have basically 2 million of additional free equity, to limit our requirement, in terms of incoming proceeds from the equity investors, because obviously you only take as much equity from your shareholders as you need to implement the investment program at hand. Now, this implies that the IPO target is now reduced from previous 7.2 million. It is now going to be 5.3 million. So once again, this 5.3 million is a new target that the company will be raising through an IPO. The second change, I'm sorry for the typo on the screen. The question should read why the changes happened. But basically, a second factor, a positive factor for all our stakeholders, is that one of the largest pension funds in the region, Citadel Asset Management, which is a subsidiary of Citadel Group, which also is managing a state-funded pension plan, Activise, has expressed its readiness to acquire a significant portion of our share issue. Now, this also comes with a negotiation on the price, as is logical for transactions of this scale. Investors can request a improved price, which happened in our case as well. So CBL Asset Management will be purchasing a substantial amount of the share issue, and in fact will be anchor investment for IPO, which once again is a very positive development. I think it should give a additional layer of comfort for everybody who subscribed before, and even more so for those investors who are only thinking about possible subscription, because obviously having a large pension fund among your shareholders definitely improves the positioning of the issuer. It should also be perceived as a additional signal to the validity of the business model, of the corporate governance, and the financial forecasts that we have put in our prospectus. Now I'll pass over to Maris Vainovskis, who is our legal advisor. So Maris will guide you through the legal technicalities of the changes and also to the practical side of things. So what does it mean for the investors who have already subscribed and for those investors who are only thinking to become our shareholder? So I pass over to Maris.
Thank you, Mr. Adamovich. Yes, I am Maris Vainovskis, and greetings to investors, both the current and the prospective ones. So, and indeed, we are pleased to have the opportunity to work for this project. We actually already cooperate for several years with the professional and dedicated team of APF. And about the capital markets, as a professional capital markets lawyer, I have to say, I am also personally pleased at how smooth actually this extension has worked so far, because capital markets is about disclosures, about clear communication, and also about taking fast action. And this is what has happened now with the very, I would say, professional forthcoming cooperation between the issuer, the banks, the stock exchange, the Bank of Latvia, who has been extremely cooperative. The extension has been granted on Monday with those two key changes. The deadline of the offering has been extended by Friday this week, and also there is the price reduction to 5.11 per share. So in order, I will just give a little bit of the legal perspective. So all investors will be treated equally, obviously. So all investors subscribing for a share will get it for 5.11. And those investors who have already put their orders in will get a refund, which will be calculated from the old price and the new price. So as you can see, the reduction is about 25% altogether. And upon allocation, your bank will, of course, let's say, transfer to your securities account the relevant number of shares that you have acquired, and the difference between the old price and the new price will be compensated to you in cash, to your cash account, which is linked to your securities account. This is how it will actually work. It is a fully regulated process. Underlying legal acts are prospectus regulation and all the relevant laws. The banking system relies on the prospectus and approved by the regulator. So therefore, as a lawyer, I can say it is safe that you will get back you will be refunded the difference between the prices. And also, obviously, a price reduction may be a nice consideration for new investors to put new orders in, or for the current investors to maybe up their stake already. And therefore, that is fully possible by Friday this week, as Mr. Adamovich explained. And that will obviously be, I think the orders are already all in the internet banks available for the new price, and therefore that is all possible. So therefore, for those of you who have already put in the orders, There is no real action needed at this point in time. You would simply wait until the end of the offering period this Friday, which will arrive quite soon because time flies, and the difference will be refunded to you, as I said. Obviously, this is a regulated process, and according to the prospectus regulation and applicable legal acts, you have the rights, in case you are not happy with the new price or any of the altered conditions, to also revoke your current orders, to cancel them, in which case you would need to act by Thursday, the 2nd of November, 3:30. And so that is the legal perspective. I also wanted to take maybe this opportunity to ask, to respond to a question which an investor asked before. I think it might be worthwhile for all of you. Let's say the situation is that the investor has already subscribed for the relevant number of shares, which corresponds to, let's say, 10,000 euros investment. And the investor asked, so with this 25% now price reduction, can I take the 25% out and buy more shares for this amount? Well, it may not be, as simple as that, but several banks can have a little bit different approaches in this respect. So the first advice would be, of course, if you have this situation, to contact your broker, to speak with your bank, because they should be able to provide you the best solution, the best course of action in this particular case. What I would do, without too much hassle and without too much calls and things like that, I would simply basically invest, for instance, in this case, 2,500 euros more based on the new offering, and I'm sure that I will get the reduction amount of 2,500 in cash back upon the allocation. So therefore, I will be invested with my 10,000, but already with larger number of shares in the end of the day. Also, just very briefly, I would say, probably for those of you maybe not fully familiar with the allocation and payment processes. So what is likely to happen according to prospectus? By Friday, by the end of the week, the subscription period expires. Then there is a weekend when all the information from the banks is put together in one table. The company then has the list of all the orders, basically, so they see the list of shareholders. Then the company on Monday performs allocation. It is when the list of investors meets the shares, right? And then upon allocation, so the investors are allocated the relevant number of shares which they subscribed for, or in case the demand will be higher than the number of shares available, there will be a proportional allocation according to the principles described into the prospectus. And then 2 days after Monday, take for payments to be channeled. So what basically happens, your money, your investment money, will be transferred by your bank to the arranger bank, who will then put it into the account of the issuer. So this, according to this 2 days process, this Tuesday and Wednesday, the money flows, the settlement happens. So the full payment for the shares is actually received by the company. And then all things having happened, the company would be ready to commence the first trading day, which is currently expected on the 9th of November. That, in short, is the likely process going forward. As always, you have to rely on prospectus making the investment decisions. This is just a brief update of what is happening, and we are ready to take questions if there are any.
Thank you. Let's proceed with the Q&A session. A reminder to all the attendees, if you would like to join the discussion, please type your question in the Q&A box that you see underneath the presentation. The first question from the audience: how the allocation will be performed in case of oversubscription?
Yes, I will take this question. The allocation will be performed after the consultation with our investment bank, the lead arranger of the issue. But basically what happens in the case of oversubscription, we have provided for a over allotment. Basically 10% of the additional issue is reserved to accommodate a additional demand for the issue. If demands exceeds that, then basically the allocation is likely to be happen following the principle, first come, first served. So basically, those investors who have invested at the earlier stage are more likely to get the full allocation of the shares that they have purchased.
Thank you. Will the deal with CBL affect free float?
No, the free float will not be affected because we're not changing the amount of shares. So the free float size will remain the same.
How big is the interest in Baltic markets, and is there a difference in Baltic states?
Yes, there is indeed a difference between the Baltic states. As of yesterday, we see that the majority of investors actually do come from Latvia, followed by Estonia, and then followed by Lithuania. We attribute that to the fact that obviously APF Holding is a much better known consumer brand in Latvia, and only relatively recently we have started to sell our product in Estonian and Lithuanian markets.
Thank you. How the new conditions affect your growth plans?
The new conditions have no impact whatsoever on our growth plans. If anything, the impact is only positive. I'll just repeat the two key considerations here, which were mentioned before. One is the additional 2 million injection in forms of the capex subsidies from the Ministry of Agriculture, which is a very positive news. And the second one is having a larger anchor investor, which is in our case the pension fund, which is, as I said, one of the largest players in the region. It also, of course, adds a very substantial credibility to the process, and also it raises the profile of APF Holdings in the capital markets. We actually look at it as an additional seal of approval for the business model that we run and for the corporate governance standards that we have in place. So all in all, I think these developments are highly positive for the company and also for our shareholders, existing and also incoming investors.
How do you describe the current mood of the capital markets based on your experience on the IPO roadshow?
I think that investors now are perhaps more cautious than they used to be. Obviously, we all see what is happening globally. We are living in a very volatile, I would say, vulnerable times, and the global sentiment is what it is. We also see that investors have become more selective now. I mean, obviously there are economical explanations behind that. One is, high interest rates. The other one is the attractiveness of fixed income instrument these days. But all in all, we have observed a very solid interest both from the retail and also from institutional investors. And again, a investment by Tiel pension fund is a testimony to that. And I think with this improved price, that all shareholders will be benefiting now due to the fact that Tiel is entering the deal, are actually a very positive news, which should make investment into our IPO much more attractive than, say, thought previously a week ago or so.
One of the participants kindly asked to explain whether you lean towards reducing the overall subscription level or keeping the share issue amount the same following the 2 million government grant funds. Are you willing to close the IPO when undersubscribed?
We are now targeting a 5.3 million, which is just sufficient to fulfill our announced investment program. So this is the target we work on, and as of today, there are no indications that the company will not be in a position to reach that target.
Talking about the dividends and dividend policy, does the new plan, meaning the 2 million grant infusion, have any effect on future dividend policy?
No, it does not have any impact on the dividend policy. It remains as it was, and after all, it was a shareholder decision. It was basically a resolution of the shareholders meeting, so it remains intact. The second part of the question was, does the state support reduce profit? Well, actually, on the contrary. Mathematically, it also implies that the return on equity will be higher, because essentially a injection of capex subsidy is pretty much a free equity, which should boost return on the invested capital for all our shareholders.
Having said that, can we conclude that it doesn't increase or decrease the time when the dividends might be paid?
No, we still operate under the same assumption that after IPO, we'll basically start the construction process. The timeline remains unchanged. We plan to fully complete all the construction works within the third quarter of next year, and all of the new facilities should be fully up and running by end of 2024, and year 2025 should be the year when all new production assets should operate at the maximum capacity.
Is Citadel ready to acquire the offered stake in full if retail investors undersubscribe and minimum proceeds are not achieved?
I'm afraid, legally speaking, I'm not entitled to comment on that. Basically, what the prospectus does provide, or amended prospectus does provide, following the regulatory requirements, we have disclosed the potential investors who have basically expressed the willingness to acquire a substantial part of the issue, and the Citadel Group Managed Pension Fund is one of those investors.
Do Latvian pension funds get guaranteed allocation, or are they treated equally, that is, on pro rata basis?
Everyone is treated equally, and that's the spirit of the prospectus, and that's something we want to adhere to. And basically, that's once again is one of the reasons why the price was changed, because we, as an issuer, felt that it's of utmost importance that it's not only one particular pension fund or institutional investor benefiting from the special price. We understand that all our investors are intelligent investors. They know how to calculate their monies. They know how to calculate investors. So once again, we felt it's only fair that it's not only one particular pension fund that is benefiting, but all our incoming investors, all incoming shareholders are fairly equally treated, and they all receive the same share, which now obviously is likely to result in a higher return on this investment than initially thought.
Continuing on the same topic, do you have any other institutional large subscribers? Have you made a roadshow with other institutional investors in Baltic region, or perhaps have you had any European USA roadshows?
All our roadshow efforts were focused on the Baltics. We did, of course, met quite a few institutional money managers, predominantly asset management companies and the pension funds. We did physical roadshows in Tallinn and in Riga. What I can say is that with the high degree of probability, there will be more than one pension fund subscribing to the issue, which I think is a very positive signal to the capital markets, because to my recollection, in the last 5 years, there haven't been any pension fund investments in Latvian IPO. So once again, we look at it very positively, and we do believe on the macro note that this should be perceived as a very positive trend for the developments of the capital markets in the Baltics.
Thank you. All questions have been answered. A reminder to the participants that this session is being recorded and the recording will soon be available. Therefore, please follow APF Holdings news. Participants, thank you for joining today.
Thank you very much for participants. Have a good day.
Have a good day. Thank you.